Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Geopolitical recalibrations are reshaping global capital flows, while regulatory crackdowns tighten the screws on digital asset compliance. We begin in Moscow, where the Ministry of Finance has issued a stern mandate requiring all cryptocurrency miners to log IP addresses in official registries. This move targets $122 million in annual tax losses caused by informal operators operating in the shadows. The Kremlin is drawing a hard line on illicit finance, signaling that the era of unregulated mining is over. Meanwhile, in Washington, the regulatory landscape is shifting again. President Trump signed 2 executive orders aimed at redefining the fintech ecosystem. One order expands Federal Reserve access for fintech firms, potentially lowering barriers to entry for digital banks. The other tightens Bank Secrecy Act rules, explicitly targeting money laundering and tax evasion. This dual approach reflects a complex strategy, fostering innovation while simultaneously cracking down on financial crime. On the macro front, market volatility is being driven by thin holiday liquidity rather than fundamental shifts in economic data. Stock indices are rising slightly, but technical indicators suggest caution. Bitcoin is showing bearish signals, struggling to maintain momentum as traders wait for clearer directional cues. The lack of depth in the market means that even small data releases can trigger disproportionate moves. In related news, India's Ministry of External Affairs outlined a delicate multi-alignment strategy during the ongoing global energy crisis. New Delhi is carefully balancing relations with Moscow, Washington, and Europe. This diplomatic tightrope walk is crucial for maintaining energy security without alienating key Western partners. The implications for global oil and gas markets are significant, as India remains a critical pivot point in the East-West energy trade. Looking ahead to today's release, traders are eyeing Mexico's balance of trade data at 12 o'clock Universal Time Coordinated. The previous figure stood at $5.932 billion, and any deviation could impact the peso and regional equity flows. Shortly after, at 12:30 Universal Time Coordinated, the United States will release the Chicago Fed National Activity Index. The previous reading was -0.20, indicating slight contraction. A stronger-than-expected print could bolster the dollar and pressure risk assets further. In Gulf markets, sentiment has improved dramatically. Indices surged as hopes for a U.S.-Iran peace deal eased geopolitical risk premiums. Qatar National Bank led the gains, benefiting from renewed investor confidence. However, underlying energy crisis concerns persist, keeping a lid on long-term optimism. The rally is largely speculative, driven by the prospect of reduced tension rather than fundamental economic improvements. As we navigate this week, the interplay between regulatory policy, geopolitical diplomacy, and thin liquidity will define market direction. Investors must remain agile, watching both the macro data releases and the micro-regulatory shifts in crypto and fintech. The market is pricing instability, but the underlying tensions remain palpable. That's your market briefing. Follow Rumour with AI for daily market intelligence.